Excited to be back for another live stream today. I'm joined by Dirk Anderson and Andy May. Dirk is the Chief Operating Officer at Salt, and Andy is heads up our crypto operations division. And today we're really going to be sharing more about how we manage customer collateral, as well as the security practices and policies that are in place to ensure we are effective and secure in how we manage and process everybody's collateral. Want to kick off, and just as a reminder, we're going to do additional live streams on Thursday and Friday, answering more questions regarding how Celsius creditors can get their loans refinanced if that's what you're interested in doing with Salt. You can also find out more information at saltlending.com/Celsius-refinance-solution. We are really committed and want to provide as much support to Celsius creditors through this process. We've had fantastic support and tremendous outreach from people, both existing Salt customers and new Salt customers who are interested in taking advantage of the opportunity to refinance their Celsius loans as we're going through this process of wind down with Celsius. So if you do have any questions, please reach out. A member of our sales and loan operations team would be happy to circle back with you and answer any questions that you might have. The process is to go to the landing page that I mentioned, then create a Salt account, do the ID verification process, and then we will be able to be more specific and directed in the responses that we're able to provide. So today we're going to focus in, as I mentioned, on collateral management and security. And I want to start off with a little bit of an overview of what we call SAFE. So SAFE is our secure asset funding environment, and it really is the environment that is at the heart of how we manage, fund, and process loans on behalf of our customers. And when a customer gets a loan with Salt, we receive the collateral. We then use a portion of that collateral to fund the individual loan, and then the rest of the collateral stays within our SAFE environment. And Andy, I want to start off with really asking you to give a little bit of an overview of the SAFE environment, and in particular, the collateral management practices that we have to help ensure the security and the efficient management of the collateral once we receive it.
Sure. Thanks, Hunter. I think that the place I'd like to start is with an understanding most people have of crypto wallets. So whether you're using MetaMask or a blockchain.com wallet or something on your phone, what Salt has done is partnered with Fireblocks. Fireblocks being an institutional wallet provider. So the difference between the wallets that you may use for petty cash versus what Fireblocks provides is really these layered security modules, this governance and policy engine that allows us to do a lot more with the wallet. What I mean by that is it's still going to have the typical wallet features. It's going to have all of the inbound records, all of the outbound records. It's going to allow us to see the history of the blockchain and all of those transactions. But the benefit of using a provider like Fireblocks, which is tightly integrated with the Salt platform, is that it helps us to create this fenced-in environment. It helps us to create a ring fence, kind of an envelope around all of our customers' assets, whether they're here within the Fireblocks environment or they're with one of our exchange partners. And all of the different attributes of how a bank would modulate who can do transactions, who's allowed to send money, is replicated in this environment. By that, I mean it adheres to two specific principles. The first one being separation of duties. So whoever is initiating a transfer, someone in one department at Salt, whether that's accounting or asset management, crypto operations, there's a separation there between the people who will be doing the review, the approval, and then the ultimate signing with the multi-party computation that Fireblocks provides. This is a way that we can achieve the second principle, which is after separation of duties, we also want multi-person approval. For SALT, we're very lucky. We have people geolocated all over the world. Our initiation of transactions, review, approval, ultimate signing, and broadcast is all separated. And all of those steps are logged, they are tracked. Our security team has many layers of alarms to alert us should anything go wrong. But the one thing that I take solace in is we have this boundary around the type of collateral that people are transacting in, the source, the destination, whether they have the ability internally to create that transaction. This is what makes a wallet institutional relative to something that you would use, say, a MetaMask or blockchain.com wallet that's just on your phone. And this is what allows us to replace people. Should there be turnover at SALT? Should there be a problem with someone's internet connection? It provides a lot of redundancy, and it provides this multi-layer security that you just can't get with many other wallet providers, or if the wallets are created in-house.
Yeah, I think that's really, I think it's an excellent overview there, Andy. And to the point where even the tool itself doesn't, there's different pieces of the tool for making requests and for approving requests. So, what we've done here just philosophically is try to make sure that no individual or even, small group of individuals could collude and be able to move assets around. A lot of the issues that we've seen over the last several years with various organizations where one person has the ability to move things or you're dependent upon one person even to like be able to move funds or assets, and and they get locked up without that. We've tried to build a really robust system here, and we built our own cold storage platform early on at SALT before migrating to Fireblocks, because we found that they could actually meet a lot of those needs that we had better than we could do them ourselves. I come from a long history in IT security, IT audit around the payment card industry. And so, bringing in a lot of those controls around the ability for an individual to be able to do anything was really part of what we were like focused on and building here.
So Andy and Dirk, thank you for that. You guys bring up a number of great points. And one of the things I want to come back to is SALT's been around since 2017. And so having lived through a lot of both exciting and really damaging events in the industry as a whole, would be interested in your perspective on what have we learned and what's been built into the processes that you've just given an overview that really help make SALT more secure and a better option as we move into a new sort of era and sort of phase of crypto growth?
Yeah, that's a great question, and it's actually got many angles. I think that really some of the things that people have learned through the cycles are related to timing and redundancy. When blockchains are crowded, when fees spike, when you can't get your cold storage to work appropriately within a specific time frame, there's a lot of fallout. This goes beyond some of the other lessons that are related to redundancies, contingencies, having your policies such that if one person is unavailable, it doesn't affect the entire operation. Like Dirk was saying, whether we've learned something from BitMEX or from OKEX or from a large exchange that had keys centralized, or if it's something where we know that People have overpaid on fees because they just couldn't get the appropriate transactions created within the time frame. What we've learned is really related to timing and having the ability to move things even when you're not looking at the best case scenario. Because as we know, many of the crypto downturns happen on holidays, on weekends, on non-business hours for the US. And we're very lucky that we do have people in other locations around the world, and that we have a very flexible platform that allows us to deal with some of these less than ideal situations.
And it's not even just the crypto world, right? I mean, the most recent thing we all had to like tumble through was a few banks that got shut down for working with the crypto world, and and all of us had to retool around how we were doing bank funding, and we're still working on some of that here. And I think we've learned that even in those things that we think of as kind of the stable pieces of it, right? People want their payout. Some people want their payout in crypto when they take out a loan. Some people want their crypto or their payout in fiat because of the way they need to spend it. And so we're having to kind of retool the redundancy even in the areas that we thought were the areas that we didn't need to worry about so much a couple of years ago.
No, Dirk, I think that's an excellent point. And I think we've seen more and more customers come to Salt really to help make that bridge from the crypto environment into traditional finance and taking out a loan where they want to leverage their crypto, but they need the liquidity to, run a business, pay sort of salaries or pay sort of operating expenses. Or if I'm an individual, to put a down payment on a home or just take a vacation. So, I think that's a really key point, that we are seeing more and more customers look at leveraging those loans, crypto-backed loans, for liquidity for both personal and corporate objectives. Dirk, I want to come back to you. We've touched on a little bit of some of the security aspects and sort of the points that you and Andy have made. Can you share a little bit more about, I guess, sort of how at Salt we think about sort of the security practices as a whole?
Yeah, sure. I mean, obviously, the big focus is on crypto, right? At the end of the day, that's the asset that we hold on behalf of our customers when it's collateral for a loan. And we absolutely want to focus on protecting that asset. We have a fair amount of segmentation in our overall platform architecture between the crypto asset protections and the rest of our platform. But we also don't want to lose PII or anything like that, right? We don't want to wind up in the news for anything. And so we spend a lot of time focused on the security of the overall platform as well. We've Andy referred back to the security team, which overlaps with our crypto operations team in some of the duties from a monitoring and alerting perspective. But obviously we're trying to follow best practices around the architecture of our platform and testing our platform and all of those sorts of things as well. We have, in the past, I know some people, and we still ask for this, right? When we're working with a lot of our vendors, we want to know what kind of third-party independent validation they've got. In the past, we've gone down that path ourselves a couple of times when we were looking a lot more at doing like institutional lending and partnering with some folks a couple of years ago. We went through the process of getting our SOC 2 Type 1. We never really moved forward on the Type 2 with that because we kind of just moved forward business-wise and didn't have people asking for that anymore. We also went through down the path. We were a very early CCSS validated, that's the cryptocurrency security standard, validated companies. Again, when we kind of shifted initially from doing all of our own custody to partnering with a third party, the CCSS kind of lost validity there because we were, because of the architecture of that. If you don't control 100% of everything under the old CCSS model. It didn't really apply. That's changing, and we're revisiting that as well. And just full disclosure, I'm a member of C4 and work both on the CCSS and the Certified Bitcoin Professional committees there. So but we look at the broad security standards across both general operations, general IT controls, as well as our crypto operations across the entire platform.
No, that's very helpful. And I want to sort of, some of the questions that we've received in previous sessions have really been focused on the idea of a customer relinquishing ownership of their keys, transferring their crypto to Salt, and how we then manage it and use it, and the benefits of doing that. I touched on earlier in terms of our process of what we do in terms of how we fund loans. I want to cover off a couple things that we don't do, but then really, Andy and Dirk, I'd love for you to weigh in on why that's important for us to have ownership of the keys in terms of how we go about managing and protecting collateral in the process of funding a loan. So as I mentioned, when we receive the collateral, what we do is we leverage a portion of the collateral to fund the loan, and then the remaining excess collateral stays within our safe environment. But what we don't do is we don't leverage the collateral to make additional profit. We don't use the collateral to fund other loans. We don't use the collateral for trading to generate additional revenue or profit for Salt. So every time we receive collateral, it is for the sole purpose of funding and securing an individual's loan. And as long as an individual, a customer of Salt, adheres to the terms of the loan agreement and pays back the principal plus the interest that is owed back to Salt, then they get back all of the collateral that they entrusted to Salt. With that said, Andy and Dirk, can you give a little bit more of a background on why that's so important and some of the capabilities at Salt that really then enables?
Yeah, and I'd like to take a step back actually to kind of early Salt days. So, I mean, without going into the fact that obviously collateral is collateral, right? The whole point of collateral is that you're holding it in lieu of something else, right? I mean, that's the basic, fundamentals of lending. But when we first built the Salt loans, we actually did all on-chain like collateral management lending, right? So your collateral went into a wallet that was unique to you and sat in that wallet the entire time. You could see it the entire time. The challenge with that, of course, is that in order to lend, then you just have to have a giant pool of cash. And as we've already talked about, one of the overall challenges in the industry is funding for anything, right? From traditional funding sources, traditional investment sources, traditional banking sources, traditional banking loans, and that sort of thing, right? So it's very limiting, right? It's very limiting to do that kind of lending. And there are a couple of lenders out there who have stuck with that, and they're very limited in the amount of capital that they have to lend out, right? And so you can apply for loans with them and have to wait to get a loan with them. They might never be able to fund a loan if it's of a certain size for you with them. And so in order to just actually kind of build a better business to be able to do more lending, we developed the process we use now that you were talking about, Hunter, where we leverage part of the loans to, or part of the collateral in order to actually fund the loans. But we're not, like you said, we're not using any of the collateral to do any other sort of profit building for ourselves. It's just to fund your loan. But it gave us the ability to then be able to significantly increase the amount of lending that we could do, right? So we have the ability now, basically to whatever somebody brings to us, whatever somebody wants, we can lend against that. And so just kind of historically, that's where we came from. We still, we, like you said earlier, Hunter, we are kind of a bridge organization, right? People are using us because they still need to have some sort of a bridge between the crypto that is the new world and that they and all of us here are, kind of driven by and passionate about, but the way that the world continues to operate around fiat currency and the ability to actually be able to go out and buy things sometimes without having to give up your collateral collateral, or give up your asset by actually selling it, right? So we kind of sit at that in between point there, and I think I probably have gotten completely off track with the question here, but yeah, I think it's just, it is we kind of have to, in order to maintain a business model that actually supports our customers, that actually allows us to grow with our customers and be able to provide what our customers are looking for. It's not that kind of like, crypto ideal of the crypto just sits here, where somebody's already always got to control the keys. And if you're holding something as collateral, you have to have some means to control that collateral. Not just, in case somebody doesn't pay the loan, but I think what Andy wants to talk about here as well. So I'll stop there for a minute.
Oh, sure. No, I really wanted to dovetail with what you were saying. One of the lessons learned that Hunter was also alluding to is one of the things that helped Salt to create what I believe is a pretty special innovation. So in addition to being able to fund your loan with your collateral, one of the things that we're able to do is protect people from full liquidation. In our earlier days at Salt, 2018, 2019, when the value of your collateral, your Bitcoin, your ETH, whatever you had accumulated and really wanted to hold on to, when that value would drop, Salt would sell it. In a lending partner, I know that I personally would like it to be more of a partnership, and to do something like this, to sell the collateral, was just devastating. I believe that one of the innovations that Salt has, one of the really special characteristics, is that if the value of your Bitcoin, your Ethereum, your Litecoin drops, what Salt is able to do, because we have access to that collateral, is we can stabilize it. For one, we don't lose you as a client. That's fantastic. When we stabilize it, we do sell that collateral. That collateral is still backing your loan. But one of the options that's available is if the value keeps going down, you don't lose that collateral purchasing power. You're actually gaining purchasing power. And if you're able to bring your loan to value back up to a healthy rate, you can actually buy back into your crypto, into Bitcoin or Ethereum, Litecoin, at a lower price,
A lower rate,
and have more. The partnership, and the way that I see it, is that if we were to sell your collateral and your loan of, let's say, $10,000 is now valued at closer to $1,000, it's a lose-lose. Salt has lost a lot of the value and the interest. Our business model isn't working as well as it could have. And you've lost a lot of that purchasing power you really wanted to accumulate and hold on to with your crypto. Stabilization is one of the features that I think is very unique with Salt, and I'm happy that we're able to do that.
Andy, that's an excellent point, and we know that that's a key driver for a lot of customers in terms of why they come to Salt and why they stay. We have over three quarters of our customers refinance with Salt and continue to grow and add additional loans for stabilization being one of the key reasons. One of the other things, well, first of all, Dirk, do you have anything to add in terms of just the process that Andy had outlined and any of the key capabilities?
No, I think I think he's largely captured it there, unless there's any specific questions. I did want to mention at the beginning, obviously we're talking about security practices and protocols here and stuff. And so there will be limits to some of the things that we'll talk about and specifics that we'll get into. But no, I think from the overall process flow, that's it.
Well, one of the areas I wanted to then bring up, because Andy sort of referenced it, and we know it's a real advantage and attractive to the customers of Salt, is the fact that we can actually allow customers to have a portfolio of collateral in order to fund their loan. So they can have Ethereum, Litecoin, and Bitcoin all sort of sitting on the platform to back the loan that they have. Andy, can you, or Dirk, can you give a little bit more of an overview of like how we manage that and how we're able to really help facilitate that given the other capabilities that we have around funding loans?
Yeah, one of the things that SALT has become quite proficient in, especially because of the upgrades to blockchains, to wallets, to the protocol itself, is that if we know the price, if we know the current sale value of a collateral type, we're able to deal with that collateral. SALT manages tens of thousands of different blockchain addresses, and whether it's on the Ethereum blockchain or the Litecoin blockchain or the Bitcoin blockchain, we know how to deal with these assets. We also know how to value them. We've been through more audits than I'd like to even recount. They are taxing, but they also help us to learn. And the way that we do our valuations is very fair. It is something that is real time, and it is something that is a partnership. So when we see the price, the value of crypto falling, we hit a certain marker, and that triggers an alert to our clients. I have worked with other products where this is not the case, and you don't get a warning at 75%, at 83.3%, and when you're about to be liquidated. When the market is moving quickly, it's very nice to have this partnership. It's very nice to have alerts, and it's good that they're triggered in real time so that you're not trying to catch up or scrambling to find your hardware wallet if you do want to just add more collateral and not be stabilized. The stabilization really does help to mitigate some losses that you may incur, because many times we don't time the market perfectly. And that's something that is just inherent to the way that crypto works. Just like another commodity, we happen to be in a space where the value can move much more quickly, though.
Yeah, and I think, to that point, right? And you mentioned earlier, Hunter, right? We've been around for a while, right? And Andy and I both been here since early 2018, and we've had a lot of time to build a platform that it does some pretty cool stuff, is pretty robust, that is pulling, pricing feeds from a whole variety of places, that monitors them quickly enough that we're able to actually do that portfolio lending that most other folks can't do, right? That allows us to look at multiple collateral types and still manage the volatility of the market around those. So.
Yeah, I think it's such a great capability, right? Because Andy, to the point you brought up about sort of helping minimize loss and smooth out sort of the timing element, having it across multiple sort of collateral types then continues that sort of smoothing opportunity, whether you are a business that is trying to sort of leverage your crypto assets or an individual, both of which we've gotten feedback from customers that we help reduce the stress of owning and managing crypto, right? So they get the liquidity out of it, but they also feel very secure and happy with having some of the additional eyesight and oversight and management of their crypto assets that they want to leverage and hold. And in many respects, Andy, I know we were touching on some of these elements that holding, putting crypto assets and holding them, in a loan oftentimes can be less stress and more beneficial for the customer than if they try to hold on to them themselves, right? Just in terms of the overall environment and protection that we have, and sort of the peace of mind, if you will, that SALT can provide. Is there anything that Dirk or Andy that you would add to that?
I think I would add something given the context of this web conference. Personally, I wish I had gotten into crypto much earlier and had tens and hundreds of Bitcoins. I do not. But I do know that the stress associated with dropping my phone that had a couple $100 on it, losing my seed phrase that had a couple $1,000 on it, or thinking that your crypto has moved without your permission when you're the one managing it is very stressful. The attack surface for crypto can be huge, and staying up to date with what is happening with the Ethereum merge or with SegWit addresses or with some of the other attributes really does take a team. In my opinion, yes, you can be your own bank, and some of us are proficient enough to do that. But to have an attack surface where you can benefit from technology professionals, financial professionals, security professionals, and have the different viewpoints taken into account really has helped me to understand the maturity of some of the other companies out there. I do feel good with what SALT provides and with the way that we mitigate the risks that can happen related to platform or related to redundancies, related to addresses and how you monitor those. Like Dirk, I think I may have lost the thread of exactly where you were going.
No. I think that's great. I want to bring up a point. I was having a conversation with Dan. Dan was on sort of the live stream yesterday, and we were, referencing in sort of a conversation after that, the benefit of having a portfolio of assets, one of which is really then the ability to sort of really stabilize and de-risk the dependency on any one currency from a customer to really help them mitigate sort of the exposure to the price drop of any one piece of collateral. It would not be a favorable situation where if Bitcoin's dropping and you're having to put more Bitcoin into a Bitcoin loan in order to bring back up the LTV to a given spot. So being able to add stable coins, being able to add other crypto assets that you might own, we know that from just a wealth management perspective, it's a great option to have, and one we're really proud to be offering.
And continuing to look at functionality and features as part of the platform to enhance the borrower's ability to do those sorts of things as well, right? I mean, those are the sort of directions that we're trying to continue to go in as we build out new features. So.
Well, Dirk, you brought it up, so let's go right there. What on SALT's roadmap are you guys excited about in terms of what we're looking to do and planning to do to continue to bring more capabilities to our customers and continue to improve the safe sort of process that we have on how we sort of manage assets and fund loans going forward?
Yeah, sure. And without making any promises around dates or deadlines or anything on the roadmap here. Some of the things we're looking at doing are, one, just along the lines of what we've already been talking about here, is allowing the borrower more flexibility to manage like the timing around stabilization. That's something that we'd like to get done in the relatively near future. From a safety and protection, kind of more focused on this call, we're looking at tri-party agreements. So basically utilizing third-party escrow between us and our funding partner to hold the asset to create a more just overall trustworthy environment. And an environment where there's less potential for impact to a customer's asset based on one of the either SALT or a trading partner's business volatility. We're also looking at basically bringing back kind of the loan structure I was talking about earlier, the original kind of on-chain collateral loan. There are, like I said, there are limitations to both of those, and there are additional costs associated with both of those. And so as we roll those things out, everybody just needs to be aware that there may be differences in, interest rates and fees and that sort of thing for the availability of some of those, but they'll be there so that people have the choice, right? And that's really what we want to continue to do. And I think going back to your way earlier question, Hunter, about what we've learned since 2017 in this industry is that we need to have flexibility around these things, right? That it's been kind of a market um, as a fledgling market that it still kind of is, right? A company comes in and they figure out how to do one thing, right? And then they start trying to do some other things, but everybody kind of figures out what their niche is and how to do one thing. And what Salt's really looking at now is how do we provide a broader service than what has just been kind of our one thing approach in the past, to give people the options around borrowing, so that they can maximize the utility of their assets.
Yeah, no, I think those are great points. Andy, anything that you would add to that?
Yeah, I think one of the things that I would add, because I'm a big fail-safe and disaster recovery nut, just seeing Signature Bank, seeing Silicon Valley Bank, seeing some of the exchanges close, I know that there is a concentration risk that is very real that crypto has faced many times throughout the last, let's say, 4 to 5 years, the last cycle. One of the things that we want to do in addition to these tri-party agreements is we want to increase the number of business partners that we work with. It's a long process for Salt. We have a due diligence process that goes back and forth between both parties on both sides, and that can take 3 to 6 months. We have many parameters that we would require our business partners to reach, and likewise, we want them to be very inquisitive of us and ask us the hard questions, so that when we do form the partnership, it is something that is reliable, dependable, and long lasting. We have, as has everyone in the crypto market, come to understand that concentration risk is something we'd like to avoid. And so the more partners we can have, the better. Now, that doesn't mean we want 500. That would actually increase your risk and your management and the fees, but we do want multiple, and that's an important thing that we work on. I would say all of the time. This is not a one-time thing. We're constantly looking for newer, better, and improved relationships with our partners.
No, that's excellent. And I know from a product perspective that the team is really excited to continue to build new products for customers on the back of the capabilities that you, Dirk and Andy, have outlined. One of that we launched recently is the treasury management solution. So really helping companies that have crypto assets get some of that liquidity and how to smooth out sort of their costs and better match sort of the price of crypto with sort of the expenses that they have. And there's some added value options for miners that have been great to have conversations around. And I think it's continuing to push us to think about how do we smooth out and make lines of credit more available or provide other types of products on the back of the capabilities that are planned on the roadmap. One of the questions that has come in is, how does our tri-party setup compare to Figure's trust agreement and that they claim is bankruptcy remote? Just even if Andy and Dirk, if you guys abstract that out a little bit in terms of, when you think about our security practices and protocols, bankruptcy remote gets talked a lot about, but, how do you guys think about that? What does that really mean in practice? And how might that compare to our approach?
Yeah, you want to go, Andy?
Yeah, I can take the first swag at that. I'm not familiar with Figure's trust agreement. Bankruptcy remote is, to me, that is something very similar to an insurance claim, which I take with a grain of salt. Like I had said earlier, the different layers of risk are pervade, let's say, a company's entire stack, from the software down to the machines, to the providers, up the stack through the access, whether it's just a password or 2FA, through operations and issues that can happen internally. There are many things that you would like to understand beyond just that hard line of bankruptcy. One of the things that I saw that piqued my attention last night is an investment that was deemed safe. This came in an email to me last night, and they used this SAFE acronym. That's fine. I think everyone is keying off of what happened with FTX, with Terra Luna, with a lot of the larger failures within the last year. What I would encourage people to do if they're interested in SALT is ask your questions. Send a message to our support team, interact with our loan ops team. One of the things that SALT has is people who are willing to share, people who will be upfront about all of the different aspects that are pertinent to you. Crypto is like a mirror. People see different things in it depending on where they're coming from. Likewise, the partner that you choose to be your lender, you should have an open line of communication with them. And people at SALT, especially on the loan apps and support team, are very open to answering any questions that you have. And if they don't know the answer, they'll speak to one of our other teams and find it out. Do your research, find out about SALT. And I'm not perfectly familiar with Figma, but these are things that the entire industry is trying to wrestle with. So our best practices are evolving.
Yeah, and I would just,
No, Andy. Oh, I'm sorry. Go
I
ahead,
was just
Dirk.
going to add to that we have looked at some, supposed bankruptcy remote solutions. These generally involve a licensed trust company, bankruptcy remote, of course. There's a lot of what's the word I'm looking for? Uncertainty there, when you start talking about like international lending and stuff anyways, right? Because under what rules, what governance and rules is that bankruptcy remote? So yeah, the solution that we're looking at right now is not designed specifically to be bankruptcy remote, but it is designed to reduce the risk dramatically associated with the funding partner process, and even and the working with SALT process as well, by bringing that third party rules based sort of collateral holder into the picture.
Yeah, no, I think those are great points, right? One, the solutions end up being very nuanced in terms of the details of the relationships, and oftentimes, opaque in terms of understanding them. I think, Andy and Dirk, the points you've raised, I think really re-emphasize SALT's commitment to trying to be as transparent as we can without sort of sacrificing the security and the sort of the collateral that we're managing on behalf of customers, but also to continue to provide the best products and services that we can in support of the community. I think as we've had these conversations internally, and even as we've had conversations externally, the empathy across SALT for the Celsius creditors and sort of the trials that we all have gone through in terms of the up and downs of crypto market. I think it is our mission to be trying to provide the best services that we can to help both protect and service crypto owners through this process so that they can better manage and protect their assets. I think that's one of the things that drew me to the company, and I'm really excited about helping be a part of as we move forward. One thing I want to pause now and just encourage people, if you do have any questions, please submit them. We'll cover them off before we close today. We will also be doing additional sessions on Thursday and Friday of this week. I'll be joined by Sean Owen, who is the CEO of the company, as well as Justin Padola, who's the SVP of Sales and Business Development. And so we will continue to make ourselves available to answer any questions that we have. While we wait for some of the questions to come in, Andy and Dirk, are there any other key points that you want to highlight that we haven't touched on?
I think one of the things that I would like to say is I saw lending as a necessary tool for any financial system. And the first time that I heard someone speak about it from SALT, I was at a meetup and I just couldn't hear enough. If I had this asset that was completely liquid, that I believed in and believed that there should be a separation between money and state, why would I want to give it up if I can still have access to it to pay my rent or pay for my college bills or expand my business? It's something that seemed very natural to me. And I would like to see quality companies in this vertical. I would like to see companies that establish a long track record with their clients of being trusted country, of working within the guidelines, is maintain licenses and others around the world. And I think that those are the will make these companies legitimate and trusted. So as a lending company, I believe that doing what we can to pause in this area, and we take lessons from others and hope others can learn from us as well.
No, I think that's very well said. And I think one of the things that's exciting for me is like if you look at it, really how billionaires and sort of the ultra wealthy manage their assets. One of the key things they do is they buy businesses, they accumulate assets that can appreciate in value that they then borrow against. And they can get more cash and then get more liquidity without having sort of the tax implications of selling their assets. And so I think it's pretty exciting to be able to bring that type of capability in a very accessible tool and product to help anybody in the crypto space manage both their assets, provide liquidity, but really start to hopefully think differently about how they manage their wealth. And, internally, right, we all say, so we want to stay long and stay liquid. And so I think it's a great opportunity. And really, I think from everybody, the employees, a very proud moment to be able to sort of make those products and services available. Dirk, is there anything else? Oh, looks like we lost Andy. Anything else you would add before we wrap?
No, I think that captures a lot of it, right? The only thing I would really add to what Andy was saying is that in addition, SALT has always kind of leaned into the regulations, right? There's a reason that we don't lend in every single jurisdiction right now, right? Because we're not licensed to lend in every single jurisdiction right now. And we haven't tried to come up with kind of like, excuses or questionable ways to do that necessarily. We have tried to just build the company legitimately step by step. But having said that, and in agreement with Andy, right, I think we have to be involved in everyone's understanding of those things, right? It's part of the reason I work with C4. We have folks in the company that work with various other organizations, and because we need to make sure that the regulations and stuff like that come out of governments at whatever level are intelligent and applicable to the industry, and not just trying to shoehorn legacy banking and 200-year-old rules into the crypto space as well. So we absolutely, as Andy was saying, lean into making sure that we're doing things the right way, and at the same time focus on trying to make sure that everybody is doing things the right way.
Yeah, no, I think you're right. And, the work that you and I both do with C4, big believers in education within sort of the overall community, both in terms of understanding crypto assets and how they should be managed, as well as from a security and a business perspective about the best practices that should be employed. So I think what we'll do is we'll wrap it up there. I want to remind everybody, first of all, if you're interested in SALT about refinancing your Celsius loan, please sort of contact sales, and you can go to a landing page at saltlending.com/Celsius-refinance-solution. The steps of the process will be from that landing page, please complete the survey. We'll get some additional information regarding the current loans that you're holding at Celsius. Second step will be to then create an account at SALT. And the third step will be to then complete the ID verification. From there, a member of our team will reach out and discuss your situation and give more details on the offer that we have. And if there are any terms that need to be adjusted, we'd love to engage and talk through that with you. So we look forward in continuing to support the community as we go forward, both with the Celsius situation and then beyond. But as a reminder, we have 2 more live streams that are scheduled this week. One tomorrow at 3 p.m. Mountain, and then one on Friday at 2 p.m. Mountain. And both of those will be focusing on answering any general questions that you might have that we haven't been able to cover in the previous sessions. So with that, we'll sign off. Have a great rest of your day, and we'll talk.
Hunter,
oh, yeah, Dirk.
sorry. Just real quickly to add on to what you were just saying there. One thing, and the reason I mentioned the jurisdictions is if you have a loan, and if you're a Celsius loan holder looking at refinancing, and you're in a jurisdiction that isn't supported by the SALT platform right now, please still reach out to us. We want to know that. We want to know. We're trying to gather as much information as we can on the volume and size of loans from some of those other jurisdictions that we've not serviced traditionally, so that we can target making those things a reality. So.
Yeah, Dirk, that's a great point. From an inbound sort of request perspective, we have additional flexibility to be able to help support, especially in a situation of a bankruptcy refinancing. So if you have, don't make any assumptions. Please reach out and contact sort of the sales team. Andy, glad that you were able to rejoin us. Any closing thoughts from you? You're on mute.
No, thank you. I think that we covered it really well, minus my tech issues. Sorry about that.
No worries.
I wish best of luck to everyone out there. And if you do have questions, please do reach out to the teams here at SALT.
Well, Dirk and Andy, thank you for your time this morning. And for everybody out there, we look forward to talking to you in the future. Take care.